Hi there, and welcome to the short session having a look at the price depth ladder function in more detail. Before we go ahead and get started, I've got a risk warning that you guys should get the chance to go ahead and look at, and I can explain a little bit more about what the price depth ladder actually is and why we created it. So for a long time at CMC Markets, we had a large number of sophisticated traders, some of which had quite large account balances and wanted to be able to transact quite large trade sizes. Now, traditionally, if you're a big position size trader, you would have to break your order up into multiple pieces if you wanted to execute your position. Now, our clients came to us with a requirement basically saying that they wanted to be able to execute their positions in just one transaction, but they also wanted to make sure that they were still getting access to the same AAA execution and pricing that CMC offered before, and that kind of gave birth to the price depth ladder function in its entirety. Now, I think we've gone through most of the risk warning on there. Hopefully you had a chance to have a good old read through of that. So let me just go ahead and switch from this, and I want to move back onto the actual trading platform itself. And as you can see, I've got one, here's one I prepared earlier. The price depth ladder is actually built in to every single order ticket that's available on the platform, and it's only really activated when you do quite a large position size. For example, if I do 20 units on US 30, then hit return, nothing really additionally happens to what you normally expect. If I try and do a bit more of a meatier trade, say for example 200 units on the US 30, as you can see there, that does activate the price depth ladder. If I just go ahead here and click show more, we're able to see a little bit more depth of price that the price depth ladder are able to offer. In its very essence, the price depth ladder allows our clients to transact much bigger position sizes than they ever have been able to do previously with CMC, and in fact with many other competitors as well. Now, what we do is we offer our clients a specific price to execute their chosen order quantity in just one transaction. Now, why that's important is if you're trading something that's perhaps in a fast-moving volatile market, or you're trading something during non-farm payrolls or during a major economic news event, if you're having to do multiple transactions to fulfill your larger trade, well, you could be losing out in a lot of pips while that is actually moving along there. And if you consider the aspect about placing a trade, then resetting the details, setting another trade, doing another trade, doing another trade, you're talking about if you had to do 5 transactions to have your entire order filled there, it's not impossible to think that something like US 30 could move about 15 points, or if you're trading FX, perhaps even 20 points in just a course of maybe 20 seconds, which can be quite a frustrating experience. There's also something to be said as well if you're trying to transact larger positions and you can get your order rejected with other competitors, or other providers I should say. That can also be equally frustrating out there, because when you're trying to get out or get into a position, you can sometimes have your order rejected. So there's some important things with CMC to bear in mind. One is that we do offer a facility when we execute our client trades, that we automatically execute our client orders, which means that even in fast-moving volatile markets, we will still fill your position at the next available price. We will not reject your trades. Okay, and that's very, very important. So the price depth ladder, as you can see there, we've got this area up here which is called the level 1 price, and this is the price that you're going to get on US 30 up to 50 units. This is also what our tightest spread is. The bigger the position size that you go ahead to do on there, as you can see there, that will get allocated further on down the ladder. The further on down the ladder that your position gets allocated, the slightly wider that the spread goes, but it's all in relation to the size of the position that you're trading. As you guys at home probably realize, that the financial markets is one of these strange things where the bigger the position that you do, the more expensive it gets. You know, usually we're always used to if you get in a bigger quantity of something, you usually get a discount. With the financial markets, that's not how it happens. So the price depth ladder actually scans the underlying market liquidity. And as you can see there, this does jump around every so often, and that's due to the fact that the liquidity in the US 30 is currently changing all the time as more trades are being transacted. And it really gives you a fully transparent look at what price you're going to get executed at for what position size that you do. If you're trading with a lot of other online providers, if you're trying to do a big trade size, a lot of the time you can't do it through the platform. You actually have to call up their sales trading desk, or speak to a trader on the other end of the phone, and you'll ask them to quote you a price for the position that you want to do, and they'll tell you over the telephone. On the price depth ladder function, you've got that full transparency, and obviously you get a good idea or a good flavour of what price you're going to get for the size of position that you want to do. So if we just go ahead and have a look at something like, say, euro dollar here, for example. If I just type in 10M, which is 10 million, and then hit return, as you can see, that activates the price depth ladder there as well. And this again is reflective of the real underlying market liquidity. You've got the level 1 price. This is what will have the tightest spread on there, and as you can see there, this is moving all the time, and that just gives you an idea of how fluid the financial markets are. Obviously during times of non-farm payrolls and all the rest of it, I think this could be jumping about that a little bit more, but remember, the further on down the ladder that your position gets allocated, the slightly more wider that the spread will go ahead and get. So what benefits does this really give you as a trader? Well, one, if you're a big position size trader, you can now transact your positions in just one trade. Okay, but we do have a very, very cool function that you guys can also take advantage of, because as I mentioned before, we do offer automatic execution of client orders. But one thing that you might want to do is we do give our clients the ability to control their execution even further, because getting filled even in fast moving markets, that's a great function, but you do open yourself up to potentially to what's called slippage. Now slippage in this instance would be if the price on the screen, which we call the screen price, by the time you click confirm the trade gets executed, the executed price could be slightly different, and the difference between the two is called slippage, and that's a very real market a potential issue out there. And if you're in a fast moving market, that slippage can vary quite greatly. For our clients, even utilizing the price depth ladder technology, they have full access of their financing as well. Obviously, clients of CMC in particular, we've got customizable financing. We could actually offer 400 to 1 leverage on euro dollar. Well, let's just say that we were very interested to do our trade. We wanted to do 10 million euro dollar, and we wanted to also limit the potential slippage in the market, because I do like automatic execution, but you know what, I just want to make sure that I'm not losing too much on my entry point. So what you can actually do in conjunction with all these features is utilize our boundary function. And what the boundary function does is allows you to control your execution. Even at these very, very large levels, you're able to set a specific boundary so that if your execution price is a certain number of points away from your screen price, as in what's seen here while you click the confirm button, you can actually set it so that it will reject your trade. Now I'm just going to go ahead there and set 0.1, though it is entirely possible to set it to be 0, which means you're completely unwilling to accept any slippage in the market, and that means that if the execution price would be any distance away from the screen price, it will just reject your trade. Now I should point out that many traders will just utilize the automatic execution because they just want to get in and out of their positions without having any of the orders rejected. But we give our clients the flexibility to choose and control their execution in ways that just aren't possible with any other providers. So that just gives you a bit of an idea of what to expect. And as you can see, this is available across all asset types. It's for equities, indices, FX, commodities and treasuries. And it is an incredibly useful tool. One quick thing I should point out with this tool is if you're trading equities, this probably does look quite similar to what we call a level 2 service. And level 2 is where you can actually see the order book on equities, where you can see clusters of orders waiting to be executed at strategic price levels. I should point out that the price depth ladder that we have here is not level 2. Okay, you're not getting any indication as to where there are future clusters of orders either higher or lower waiting to be executed. This function is to give you visibility of what price we will quote you to execute your transaction, and especially if that transaction is far larger than the normal market size. It is not giving you any indication as to where clusters of orders could be waiting to be set. So anyway, that gives you an idea of what to expect for gold. And if we have a chance to have a look at something like the UK 100 on here, and I say something along the lines of 100 units, as you can see, it's a very simple process to utilize, and you can see the full 10 layers of depth. As you can see from when we look at your dollar in there, you won't always have 10 layers of depth available to you, but it's always dependent on the underlying market liquidity. And this tool in general is meant for large position size traders who want to get that unrivaled execution, who want to have control over their execution, and want to have their positions transact in just one order. Well guys, thank you very much for listening, and we'll see you again.